Somewhere in the last decade, wealthy people around the world started doing something that sounds financially insane. They paid a bank to hold their money. Not a small fee buried in the fine print, an actual negative interest rate, where the balance in the account shrinks every year just for existing. And instead of pulling their money out in protest, they sent more of it in. To understand why, you have to walk down a quiet street in Zurich called Bahnhofstrasse, where some of the most heavily guarded private vaults on the planet sit beneath office buildings that look almost boring on purpose, it turns out, is the whole product. Most people picture a Swiss bank account as something out of a spy film, a numbered account, a briefcase full of cash, a banker who never smiles. That image is mostly outdated. What Switzerland actually sells today is something quieter and, honestly, more profitable than secrecy ever was. You're not paying for a vault. You're paying for a country that has managed to stay boring, stable, and untouched while the rest of the world lurches from crisis to crisis. Here's the number that makes this click. Assets under management at Swiss banks hit close to 9 trillion Swiss francs in recent years, roughly $10 trillion, according to the Swiss Bankers Association's own Banking Barometer report. A meaningful chunk of that belongs to people who don't live anywhere near Switzerland. So if it's not the interest rate pulling that money in, what is it? It's the currency itself. The Swiss franc has a reputation as one of the safest currencies on earth. When a war breaks out, when a government freezes bank accounts, when a currency back home starts losing value by the week, capital doesn't just get nervous, it moves. And it tends to move toward Zurich and Geneva, the same way water finds the lowest point in a valley. Now, Switzerland likes to market itself as 200 years of untouched neutrality, and mostly that holds up. But it's worth pausing on one uncomfortable chapter, because a serious channel doesn't skip it. During and after the Second World War, Swiss banks held onto dormant accounts belonging to Holocaust victims for decades, and it took a class action lawsuit and international pressure before the country's largest banks agreed, in 1998, to pay out $1.25 billion in restitution. That's not a footnote you'll find on a tourism brochure. It's a reminder that the safe and neutral story Switzerland sells has always come with an asterisk, which makes the modern pitch a little more interesting. Because opening one of these accounts today is nothing like walking into a branch with your passport. Private Swiss banks that manage serious wealth typically ask for a minimum deposit starting around $250,000, and the more exclusive institutions won't even take your call unless you're bringing in 7 figures. This is not a bank built for someone saving up for a house. It's built for someone who already owns several and needs somewhere discreet to park the rest. And discretion is not cheap. Private banks generally charge management fees between 1 and 2% a year. Sit with that for a second. On a $10 million account, that's somewhere between $100,000 and $200,000 annually, before you even add transaction costs, currency conversion fees, and advisory charges on top. If you've ever complained about a $5 ATM fee, this is the same industry, just wearing a much nicer suit. So why do people keep paying it? Because compared to the alternative, it feels cheap. If you're a business owner in a country where inflation eats 10% of your savings a year, or an investor who's watched a local currency collapse overnight, a 2% management fee starts to look less like a cost and more like insurance. Nobody's buying growth here. They're buying a hedge against chaos. The secrecy part of the story, though, mostly ended. Switzerland's legal framework for the Common Reporting Standard came into force on the 1st of January 2017, and the first actual exchange of account information with foreign tax authorities happened in 2018. Practically overnight, the numbered account that nobody could ever trace stopped being a real option for hiding money from your own government. The industry had 2 choices: shrink or reinvent itself. It reinvented itself. The new pitch isn't hiding your money, it's protecting and growing it, using access most people simply can't buy elsewhere. Private equity deals, fine art funds, direct stakes in companies before they ever go public, the kind of opportunities that don't get advertised on a retail banking app. That vault on Bahnhofstrasse we started with was never really about what's sitting inside it. What it's really selling is the same thing it's been selling for 2 centuries: the feeling that your money is somewhere the rest of the world can't reach. There's a psychological piece to this too, and it's easy to miss if you're only looking at spreadsheets. When someone opens an account with a firm like UBS or Julius Baer, they're not just buying a service, they're buying a feeling. The feeling of a private banker who remembers your kids' names and calls you personally the moment markets get shaky, instead of routing you through a call center in another time zone. That feeling is engineered on purpose, and you're paying 6 figures a year for it, whether you realize it or not. None of this is risk-free, and 2023 proved it in brutal fashion. Credit Suisse, one of Switzerland's oldest and most storied banks, collapsed almost overnight after years of scandals and bad bets, and UBS absorbed it in an emergency government-brokered deal worth around $3.25 billion, a fraction of what Credit Suisse was worth at its peak. Even in the country famous for financial stability, stability was never actually guaranteed. It just looked that way for a very long time. There's also a mistake that trips up newcomers who think a Swiss account is some kind of tax loophole. It is not. Not anymore. Using one to dodge taxes back home isn't clever. It's a fast track to fines and audits now that information sharing agreements are fully active. The people actually benefiting from Swiss banking today are the ones using it exactly as intended. Legitimate diversification, estate planning, and protection from a single government's bad decisions, not concealment from the taxman. So who really wins in this system? Mostly, the banks. Private banking remains one of the most consistently profitable divisions for institutions like UBS, generating billions in fee income with far less risk than trading or lending. For the clients, the payoff isn't measured in flashy returns. It's measured in peace of mind, currency diversification, and the quiet confidence that their wealth isn't tied to the fate of one unstable government. Which brings the whole story back to that quiet street in Zurich. The vaults underneath it were never really the point. The point was building a reputation so stable that people would hand over their money and thank the bank for the privilege. Switzerland didn't just build banks, it engineered trust into an export product. And if this story proves anything, it's that trust, priced correctly, might be the most expensive currency in the world.